Ever wondered why so many traders, even smart ones, lose money? It's not always about a bad strategy or a lack of knowledge. More often than not, the real culprits are two powerful emotions: fear and greed. These two feelings are like puppet masters, pulling the strings on your trading decisions and leading you straight into disaster. Today, we're going to pull back the curtain on how fear and greed sabotage your trading performance and what you can do to take back control. Let's start with a hard truth. Most losing trades are born from an emotional reaction, not a logical decision. You have a solid trading plan, you've done your research, and you know your entry and exit points. But then the market makes a sudden move. Fear kicks in. You panic and sell a good position way too early, just to see it reverse and shoot up right after you're out. Or maybe greed takes over. A trade is going well, you're in profit, but you want more. You ignore your target price, hoping for that one extra tick, and then watch in horror as the market turns and your profits evaporate, sometimes even turning into a loss. Sound familiar? This is the classic emotional roller coaster that derails countless traders. When emotions are in the driver's seat, your carefully crafted trading rules are tossed out the window. One of the most destructive behaviors driven by emotion is revenge trading. You just took a loss and you're angry. You feel like the market owes you something, so you jump right back in with a bigger position, trying to win back what you lost. This isn't trading, it's gambling fueled by frustration. You're not analyzing the chart. You're just throwing money at the screen, hoping to get even. The result? Almost always, it's an even bigger loss. This vicious cycle can wipe out an account in a shockingly short amount of time. The market doesn't care about your feelings. It doesn't know you just lost money. Trying to fight it out of anger is like trying to punch the ocean. You're the only one who is going to get hurt. This is where discipline and risk management become your ultimate shield. They are the objective, unemotional guardians of your capital. Sticking to your predefined stop loss, no matter how much you want the trade to work out, is what separates successful traders from the rest. It's not about being right on every trade. It's about making sure no single trade can knock you out of the game. In the long run, consistency will always beat emotional chaos. Trading is a marathon, not a sprint. The goal isn't to hit one massive home run fueled by a greedy impulse. The goal is to consistently apply a proven strategy over and over again, allowing your edge to play out over hundreds of trades. Emotions completely distort your perception of risk and reward. When you're greedy, a high-risk, low-reward trade can suddenly look incredibly appealing. You might risk $100 just to make 10, simply because you're caught up in the excitement. Conversely, when you're fearful, even a perfect setup with low risk and high reward can seem too dangerous to take. You become paralyzed, unable to pull the trigger on a trade that fits every single one of your rules. Emotions make you see the market not as it is, but as you want it to be or as you fear it might be. This distorted view is a recipe for failure. A disciplined approach, on the other hand, ensures that you are always evaluating risk objectively, based on your plan, not on a gut feeling. This is where patience comes in. Patience is a superpower in trading. It's the antidote to the impulsive nature of fear and greed. Being patient means waiting for the market to come to you, waiting for that perfect A+ setup that aligns with your strategy. Impatient traders, driven by the fear of missing out or FOMO, jump into mediocre trades just to be in the action. Patient traders understand that sometimes the best trade is no trade at all. They're comfortable sitting on their hands, preserving their capital for high-probability opportunities. And when you are patient and you follow your rules, you start to see consistent results. This consistency is what builds real, unshakable confidence. It's not the fake confidence that comes from a lucky winning streak, but the deep-seated belief in your process because you've seen it work time and time again. This confidence allows you to execute your trades without hesitation and manage them without anxiety. Ultimately, it all comes down to discipline. Discipline is the bridge between your trading goals and your actual success. It's the conscious choice to follow your trading plan, even when your emotions are screaming at you to do the opposite. It's about doing the hard thing, the boring thing, the right thing, over and over again. Think about the classic market cycle. At the very bottom of a market crash, when prices are at their lowest and opportunities are at their greatest, what is the dominant emotion? It's absolute terror. Fear is at its peak. Everyone is panicking, selling everything they own. The disciplined trader, however, sees this as a potential buying opportunity, following their plan while others are paralyzed by fear. Now, let's flip that. What about at the very top of a bull market? When the market has been going up for months and everyone is euphoric, convinced it can never go down, that's when greed is at its absolute peak. People who have never traded before are jumping in, taking out loans to buy stocks, completely blind to the risks. The news headlines are all screaming about new all-time highs. This is the point of maximum financial risk. The disciplined trader, recognizing the signs of irrational exuberance, is likely taking profits and stepping back while the greedy masses are just getting in. The market is a master at playing on these emotions. It makes you feel fearful when you should be greedy and greedy when you should be fearful. And let's not forget the role of the media and social media in all this. Financial news channels, Twitter, Reddit, they are designed to amplify emotions. Headlines are written to grab your attention, often by stoking fear or greed. You will see dramatic reports of a market collapse or a once-in-a-lifetime opportunity in some new hot stock. This constant stream of emotional noise makes it incredibly difficult to think clearly and stick to your own analysis. A huge part of developing trading discipline is learning to filter out this noise. You need to trust your own research and your own plan more than you trust a sensational headline or a random tweet. Turn off the noise and focus on your charts. So how do we finally conquer these destructive emotions? It starts with awareness. You have to recognize when fear or greed is influencing your decisions. A trading journal is an invaluable tool for this. After every trade, don't just write down the entry and exit. Write down how you were feeling. Were you anxious, excited, angry? Over time, you'll start to see patterns. You'll realize that every time you feel that greedy urge to double your position size, it ends badly. That awareness is the first step toward change. Next, you need to have an unbreakable, non-negotiable trading plan. This plan should detail exactly what your setup is, where you will enter, where you will place your stop loss, and where you will take profit. It's your constitution. Before you enter any trade, you must be able to check off every box in your plan. If a trade doesn't meet all your criteria, you simply don't take it. No exceptions. This mechanical approach removes the emotional guesswork from your trading. You're no longer making decisions in the heat of the moment. You're simply executing a predetermined plan. Discipline is the muscle that allows you to stick to this plan. And just like any muscle, it gets stronger the more you use it. Every time you resist the urge to revenge trade, or you patiently wait for your setup instead of chasing a bad entry, you are strengthening your discipline. It won't happen overnight, but through consistent practice, you can build an iron will that is unshaken by market volatility. Remember, the market will always be there tomorrow. There will always be another opportunity. Don't let fear or greed force you into making a decision today that you'll regret tomorrow. Focus on the process, not the profits. If you consistently execute a solid plan with unwavering discipline, the profits will take care of themselves. Trading is a mental game above all else. Master your mind, and you will master the market. Thanks so much for watching. If you found this helpful, make sure to hit that like button and subscribe for more content to help you become a more disciplined and profitable trader. See you in the next video.